Salam sejahtera, dan bersama saya Rizal Zulkapli dan ini Niaga AWANI. Kita mulakan dengan perkembangan luar negara. Saham di pasaran New York meningkat pada Isnin dengan perkembangan positif ujian vaksin COVID-19. Terkini pengeluar ubatan AstraZeneca dilaporkan meneruskan ujian klinikal COVID-19. Antara saham yang turut mencatatkan kenaikan termasuk saham farmasikal lain yang turut kembangkan ujian vaksin mereka. Menurut laporan Reuters yang memetik Inverness Council, pasaran suka laporan positif berkaitan vaksin kerana ia dilihat sebagai penyelesaian utama bergerak ke hadapan. Antara saham lain yang naik termasuk Oracle, susulan laporan ia menang bidaan untuk operasi TikTok di Amerika. Pada penutup, indeks Dow Jones meningkat 327 mata, indeks S&P 500 naik 42 mata dan juga indeks Nasdaq naik 203 mata. Pada minggu ini, pasaran akan tertumpu kepada mesyuarat The Fed terakhir sebelum pilihan raya Presiden Amerika Syarikat pada 3 November ini. Dan akhir minggu lepas, Goldman Sachs melaporkan yang wujud ketakutan yang tinggi dalam pasaran seperti disaksikan ketika kejatuhan saham teknologi pada sekitar tahun 2000. Dalam masa yang sama, apakah yang akan dibincangkan oleh The Fed dalam mesyuarat terakhir sebelum pemilihan Presiden Amerika? Untuk membincangkan isu ini dan juga kesannya kepada pasaran adalah Jameel Ahmad, Pengarah Strategi Pelaburan NAGA Group. NAGA adalah syarikat pelaburan dan fintech tersenarai di Jerman. So Jameel, Goldman Sachs said last week that Wall Street's most popular fear gauge is flashing a warning sign not seen since the bursting of the dot-com bubble in 2000. Tell us more about that and what does this mean?
Seen is that volatility is increasing, and specifically the volatility indexes suggesting that there is a level of fear in the markets that's not anywhere near the extent as what we saw 6 months ago when there was the biggest free falls in some asset classes for decades, but there's uncertainty there. I think that this uncertainty is likely due to very overstretched valuations. For as tremendous of successes and milestones that a number of technology stocks have made this year, whether that's Apple becoming the first US $2 trillion company, or something like the Tesla stock was at one stage valued at about 1,000% more than what it was over the past 1 year, and other real star performers, that if the valuations could be justified, that's another question. So I think there is some concern that perhaps markets have got very excited, they've got very optimistic, and valuations are stretched beyond the economic normality. And this is something that I agree with. You look at economic data releases and where economies are right now, where some countries have had, a decade worth of growth wiped out, or in some cases there's as much growth as they've seen this century, then I would agree that, yes, valuations are extremely stretched. So I think that it's investor fear in relation to stretched valuations rather than investor fear that there's going to be something bursting. Now, of course, time will always tell, and financial asset classes are fluid, they're fast-moving, and things can move extremely fast in this type of environment. But overall, we see volatility that's on a few different risky assets, which are mainly stocks, global stocks, oil, and these type of assets that rely on a good sentiment towards taking on risk in your portfolio. And we don't see a sudden rush towards safe havens like gold, the US dollar, Japanese yen, which would see much more significant demand than what we have seen over the past couple of weeks so far. And this would be more of an indicator that there's something more serious behind the market stress. Right now, I'm rather relaxed that this is a correction. It's nothing worse than this. Of course, that can change as more information becomes available. But right now, we've seen 3 big sell-offs in the past 2 weeks as we're in mid-September. But it hasn't been chaos every day. We see some days that are good in markets, some days that are bad, and that's quite normal for price action, specifically when there's been big declines, you can have an increase and so on. So I wouldn't be too concerned about some of these headlines, but it's something that investor needs to be aware of nonetheless.
Jameel, what could be some of the factors contributing to this? The US election, the US-China tension. What do you think could be some of the factors contributing to this?
There are a number of overall different factors that are contributing towards the heightened market volatility. Some very popular themes include the US election, which is coming up early November. But as of yet, I do not think that we're seeing election jitters in the market. I think actually that because the pandemic and the day-to-day world that we're living in is very fluid, I don't think investors have yet really put attention on the US election. It's possible they're not going to do it until 1 month before the event. US-China tensions, of course, this is always a popular choice towards what we are seeing in market volatility. But I don't think now US tensions are driving markets. What I think is really driving the sell-off or the volatility that we've seen in recent weeks, it's fears of a second wave. Infections are growing everywhere. So we see that this pandemic is still, causing a lot more problems, and phase 2 could already be arriving. If you look at some of the numbers that are coming out from France, coming out of the UK, Europe, and other parts of the world and the Middle East as well, specifically over this weekend, we've seen an uptick of infections, unfortunately. And I think that this pandemic is what is causing the market volatility, whereas investors are potentially preparing for phase 2. Hopefully, economies do not enter lockdown again. I also think that what we are seeing is maybe some anxiety that a vaccine, although there's high hopes that one will be available soon, we don't have tangible details. So it's possible that investors are getting a bit concerned over this lack of clarity. But I think the number one thing really is that the market has priced in so much good news that has got way too optimistic and ahead of itself. So I think that what we're just seeing overall is profit taking. And I hope that this is the case. It's profit taking, it's a correction rather than a bubble bursting.
And Jameel, how are investors reacting to this?
So in terms of how investors are reacting to overall volatility that we've seen in September so far, and that has been elevated, is that I'm more at ease than maybe some others in the market. I do believe that the volatility that we're seeing is a correction, and I think that corrections are healthy for markets from time to time. I know that there's this fear that the market can go up, and when it falls, it can fall very dramatically. And we've seen some examples of this over the past couple of weeks. But I look at it as a balloon, and the balloon got very inflated and the balloon got very big. And I see this as an example, as an analogy, as some of the air being let out of the balloon rather than the balloon popping altogether. And what helps comfort me on this is that while technology stocks and US equities and major equity markets have been very volatile, we haven't seen some of this reaction in stalled momentum or fluctuations in safe haven assets such as the Japanese yen or gold. And this is why I'm still a little bit more calm at this stage, that it is a correction rather than something bigger cooking behind the scenes.
And Jameel, is the volatility or this fear prevalent across the board or more focused on specific sectors?
So this one is a very interesting topic. When we think about US-China tensions overall, yes, all global asset classes can be sensitive to this. Let's look back to what happened in the markets between 2018 and 2019. In fact, prior to the pandemic, US-China relationship, US-China tensions, the trade war, that was the major theme in the market. Now, essentially, what we've seen more recently with US and China is that there are still tensions. This is very clear, but it's more on the technology and intellectual technology level. So this is where we've seen a little bit more volatility that's been more focused towards technology stocks. rather than fear that's being coordinated towards other asset classes. But again, let's see what happens after the US election, because if President Trump is successful at winning a second term, I do expect that nationalistic and protectionist agenda will be ramped up to even more levels than what we saw in Q1. And by Q1, sorry, I mean that the first term of President Trump. So yeah, there's definitely going to be more action on this face.
And according to the Business Insider, the Bank of America lifted its forecast for third quarter US GDP growth to about 27% from 15% earlier on Friday, but it has lowered its fourth quarter projection to about 3% from 5% for the US GDP. Is this enough to support market sentiment probably this week?
World economic activity, including the United States economic GDP projections, are definitely improving from what was really horrific and apocalyptic global economic releases everywhere between the lockdown period and even until when economies are still reopening. And of course, there's still challenges. Essentially, yes, we do see that the US economic momentum is improving. Data is getting better, specifically when it comes to jobs and people finding employment. But still, the US economy is 10 million jobs less than what it was prior to the pandemic. So there's still some way to go. Essentially, why retail sales and consumer trends are so important for the US economy is that the US economy, 70% really of up to GDP is actually based on consumer sentiment and consumer spending. So that's why it's extremely important that retail sales figures, housing sales, other elements of consumer spending continue to show improvements. And if those figures do impress, then there is a likelihood that more think tanks will increase their projections for US GDP. Essentially, the GDP dynamics of all major economies is extremely different. To give you an example between the US and the UK, just as one hypothetical example, consumer spending does not mean that much for the UK economy as what it means for the US. The UK economy is much more services related. Services accounts for about 70% of UK GDP. But in the terms of the US and the US economy, consumer spending is extremely critical. If there is not consumer spending, if there is not a recovery in consumer spending, the US economic recovery is going to take far longer than anticipations.
And Jameel, what can we expect from markets in Asia this week? Federal Reserve, we know that the Federal Reserve Open Market Committee will meet later in the week. How will this probably affect trading this week in Asia?
So overall, we expect a busy global markets, including Asian markets this week, specifically because of the Federal Reserve US interest rate decision. Now, ahead of the decision already, from what we see in price action on Monday, it looks like investors are preparing for the Federal Reserve to repeat the same narrative, that they will keep interest rate policy and monetary policy framework at very flexible levels, which means there's going to be more accessibility to increased cash for investors, which is something that they've liked in the past and enjoyed hearing in recent history. And overall, we expect for the Federal Reserve to repeat the same message, that interest rate policy globally has to remain low. Central banks still have to keep accommodative measures to stimulate the economy. At the same time, the government stimulus measures also have to remain in place. And generally, this is seen as providing some help to improving risk appetite, which means that riskier assets, including emerging markets, Asian stock markets as a whole, can also see buying support from this kind of narrative.
Thank you very much, Jameel. Dan itu tadi Jameel Ahmad, Pengarah Strategi Pelaburan NAGA Group AG. NAGA adalah syarikat pelaburan dan juga fintech tersenarai di Jerman. Kita akan berehat seketika, kembali selepas ini.